As expected by our analysts, Wall Street did not have a lucky opening of the trading week. The benchmark stock indexes closed in the red due to the hawkish remarks from the Fed policymakers and mixed economic data. The season of corporate reports is in a full swing, though today the focal point will not be financial records. Market participants are alert to comments from the Fed's policymakers on the timeline for rate cuts. You are watching a daily review of the US financial markets with me, Ekaterina Stikhina. The major stock indexes closed with losses yesterday after a long winning streak. The Dow Jones and the S&P 500 closed at record highs for several sessions straight. The indexes slipped due to the fundamental reasons. The S&P 500 shed 15 points, or 0.32%, to close at 4,942 points. The New York pre-market today was more optimistic. The Dow Jones again came under pressure, while the S&P 500 and the Nasdaq rebounded by 0.1 and 0.2%. The S&P is expected to trade in the intraday corridor between 4,920 and 4,978. The fundamental picture on a Monday did not support risky assets. Stock investors are still discouraged by the unexpectedly robust non-farm payrolls. Moderately hawkish comments followed from Fed's policymakers. In an interview on a Sunday, Jerome Powell said that more evidence of a sustained decline in inflation is needed to justify cutting rates. On Monday, Minneapolis Fed President Neel Kashkari aired the hawkish statement, and the policymaker wrote in an essay published on Monday that a strong economy could delay rate cuts for some time. Fresh data from the Institute for Supply Management showed that expansion in the U.S. services sector accelerated in January, while commodity prices rose to an 11-month high. And this dampens the risky mood among global investors. Vice versa, doubts about the rate cut have increased. U.S. Treasuries came under additional pressure, with the 10-year yield rising for the second day in a row to reach its highest level since late January. What the market had after the Fed meeting at this stage is not very convincing. The Fed's policymakers delivered the message that traders were too hasty in their expectations of a rate cut, and the fresh data underscores this. A too hot labor market worries market participants, especially given the emphasized importance of its condition for the Federal Reserve. Every day, the likelihood of a rate cut is dwindling. Much is almost completely crossed off the agenda, but May is also at the 65% probability level. At the same time, traders predict a 94% probability for a rate cut in June. In addition, the market is now estimating a rate cut of 100 and 125 basis points this year, compared to 150 last week. This revision of the forecast certainly dented the risk appetite, considering that the corporate earnings season is coming to an end and market leaders have already reported the US stock market needed more catalyst for growth. That's why traders will pay special attention to the statements of central bank policymakers Loretta Mester from Cleveland, Philadelphia Fed President Patrick Harker, and Boston Fed President Susan Collins. The currency market is trading sluggishly today. Popular forex instruments are trading steadily. Major currencies are giving in to the firm US dollar. Its index inched up by 0.05% before the opening bell to open at 104.50. The US dollar is likely to trade in the intraday corridor between 104.20 and 104.76. The Reserve Bank of Australia on Tuesday joined the Federal Reserve in voicing caution as it refrained from signals about an imminent rate cut and even maintained the hawkish rhetoric. In contrast, the ECB and its policymakers appear most dovish, warning against keeping elevated borrowing costs for too long. As a result, the euro is steadily weakening while the US dollar index is growing. It hovered near 3-month high on a Tuesday after hitting 104.60 on a Monday. It's the highest level since November 14. As the US dollar is losing its grip, the Canadian dollar signed a bit of relief on Tuesday and recovered a little. By the opening bell, the USDC pair was trading at 0.05% lower at 1.3530, and the intraday carry for today is outlined within the borders of 1.3488 and to 1.3560. Oil prices continued their bullish trend on Tuesday as investors await results from a top U.S. diplomat Antony Blinken about his efforts in the Middle East to end the war in Gaza and ease tensions in the major oil-producing region. However, fading demand expectations limited oil growth. Both benchmark rates rose by 0.4 and 0.6% intraday. Apart from a recovery in oil market quotes, the loonie today can rely on the support of the domestic central bank. Bank of Canada Governor Tiff Macklem spoke in Montreal during the New York session. There is no clear-cut trajectory in the crypto market today after the volatility caused by the approval of ETFs. The market is looking for balance, but remains optimistic. Bitcoin continues to trade sideways, and today its price jumped by 1.3% to trade at 42,900. The past trading range from our analysts suggests fluctuations within the range of 42,000 to 43,400, and the next support levels are 41,700 and $40,000. Resistance embraces the levels between $43,700 and $44,300. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on daily market developments. Financial markets offer ample trading opportunities. So see you online tomorrow.